Good morning and namaskar. Today we will look at GOA Carbon Limited. GOA Carbon Limited was incorporated in 1967. It is in the business of manufacturing calcinated petroleum coke, CPC. It is a part of the Dempo group of companies headed by Mr. Srinivas V. Dempo. Mr. Jagmohan J. Chabra is its executive director. The company generates 100% of its revenue from a single product, calcinated petroleum coke, primarily used in the aluminum smelting, graphite electrodes and titanium dioxide manufacturing. Clients: National Aluminium Company, Hindalco Industries, Steel Authority of India, etc. It supplies to certain overseas clients such as Aluminium Pechiney, France, Aluminium of Greece, Sabic of Saudi Arabia, Dubai Aluminium, Sohar Aluminium Company, Sultanate of Oman, Alucam of Cameroon, etc. The company has a licensed capacity to manufacture CPC of 1 lakh metric tons at its Goa unit, 1,68,000 tons for Paradeep unit, 40,000 tons metric tons at Bilashpur unit. 3 units are there. Revenue concentration. The company derives 94% of its revenue from aluminium smelters. 80% of revenue comes from 2 major customers, Hindalco and Vedanta Aluminium and Power Company Limited. Hindalco and Vedanta Aluminium and Power Company. So, too much dependence on just 2 companies. Because they are reliable companies, that's a different thing. But still, it has to have wider canvas. The company has foreign exchange risk because it imports raw materials like raw petroleum coke, which are linked to international price in dollar terms. So exchange fluctuations are there. And again, import restrictions also may be there sometimes. The Honorable Supreme Court has capped the import of GPC by the calciners and the import of CPC by the aluminum smelters at 1.4 million tons per annum and 0.5 million tons per annum. So, under the aegis of Supreme Court, certain top restrictions have been levied for the import of the raw materials like GPC. Now, the company has delivered reasonably good profit growth in the last 5 years, something like 31.8%. But with the import restrictions by the Supreme Court, what will happen? We'll have to wait and see. Promoters have pledged 92.8% of their holding, which is a very alarming thing to do. Now let us take a look at the latest results also. The reasonably good results. Net sales are 426 crores against 205 crores in Q1 and 151 crores in last year Q2, which means 183% year-on-year growth and 108% quarter-on-quarter growth. Raw material prices have also gone up. 311 crores was spent on raw materials, and previous quarter Q1 198 crores and a year ago quarter 159 crores, which means about 96% growth in raw material costs year on year, and 57% growth in raw material costs quarter on quarter. Now net profit, if you come to that, it reflects a similar picture, a better picture than that. Net profit has grown to 35.39 crores in Q2 compared to 14.48 crores in Q1 and 6.16 crores in last year Q2, which means 475% growth in year on year in the net profits and 144% growth in net profits quarter on quarter. Equity is 9.15 crores, basic EPS is 38.68. So the quarterly results are good. Now how will it perform in the next quarter, next quarter, that we don't know. We'll have to wait and see. The current prices are around 580. Volumes are 81,000 and not very big, not very low. So the sales have been going up in the previous quarters also. For instance, in the June quarter, it went up by 64.24% year on year. In December quarter, it went up by 166% year on year. In September 2021, it has gone up by 71.07%. So like that, it has been going up. The price trend is bullish, and it has proven to be a strong performer despite the curbs levied by the Supreme Court. Price currently it is very near to the 52-week high, 15.3% away from the 52-week high and 90% away from the 52-week low. Momentum is bullish. It has been an outperformer during the last 1 month compared to Nifty. So if you look at how it compares with the industry, price earning ratio is below the industry median. Price to book ratio is high in the industry. PEG ratio is below the industry median. Profit growth is below the industry median. Revenue growth is reasonably good. Operating profit margin also is very good. Now shareholding pattern, I have already told. Promoters have pledged 92.75% of their holdings in September quarter. Why did they did it? We'll have to wait and see. Promoters holding remains unchanged at 59.72%, though out of this 92.75% has been pledged. FIs have decreased their holding from 0.2% to 0%. Of course, trailing 12 months EPS is good. Annual EPS growth also is good. Quarterly growth in revenue is good. Effectively using capital, that is ROCE, has been improving. Shareholders funds, the revenue on equity is good. Return on assets has been improving, and latest quarter, if you see that, quarter on quarter growth and year on year growth of net profit and net profit margin are good. Annual net profits are increasing. Latest results are very good. Stock gained about 20% in the last 1 month based on the results. Then if you look at the weaknesses, last traded price is still less than stop loss 2. Cash generated from the core business, declining cash flow. Poor cash is generated from the core business, declining cash flow. Okay, opportunities negative to positive, it has come during the last 3-4 quarters. A low price earning, like that. 52-week high is 682 and 52-week low is 303. EPS is earnings per share is high, 89 something like that. Price to book is okay, moderate at 4.62. Face value is 10 rupees. Book value is 125. Okay, overall it is okay. So turnover has been growing. Annual report of FY22 also shows a good picture. So the GOA Carbon Limited is performing well, especially in the latest quarter. But will it perform in the same way in the next quarter? That we'll have to wait and see. Thank you very much for listening to me. Kindly listen to the video 2-3 times. See, the main problem here is why promoters have pledged 92% of their holdings. Latest quarter is good, but previous quarters were just half. So we may have to wait to see the next quarter results, whether they will also be equally good. If they are equally good, go ahead, examine it and take your decisions. Tell all of your friends also to subscribe to this channel. I will be giving you very good companies here. Now you would have seen that most of the times I select companies with a profit growth of more than 100%. When they are good, I may not say you buy immediately. I won't say that. I am not authorized to say that also, because that requires SEBI's qualification. I am NSE certified. Okay, but GOA Carbon is a good company based on the latest results. Those of you who want to wait for the next results, wait for another 2 months. Thank you for listening. I will be back with you with another good company. Almost always, I select companies with good performance, more than 100% growth in net profits. Thank you.